Hi everybody, this is Lara with your end of the week analysis for the S&P 500 for the trading week ending Friday 13th of December. The next target for upward movement is at 3238, but it may be too high. After that, the next consolidation is expected at 3302, and then the final target remains the same at 3336 for the last consolidation. Along the way up in this bull market, I'm expecting still three large pullbacks or consolidations. I had expected last week that minor 4 had arrived. That's not the case. It still may be ahead of us, and so the upward trend resumes. Elliott Wave analysis first, classic analysis last. This Elliott Wave count, beginning March 2009, sees this bull market as the simplest Elliott Wave structure, a 5-wave impulse. 1, its cycle degree, is off to the left of the chart. It's on the last candlestick in November 2014 on the weekly chart. 2 is here, 3, 4, and now 5 needs to complete. When we place 1, 2, 3, and 4 in those positions, we can then draw a channel using Elliott's first technique. This channel is not drawn from this low to this low, it's drawn from the end of 1, which is the last weekly candlestick in November 2014, to this candlestick here for 3, and then a parallel copy is placed on the low of 2, and that perfectly shows where 4 found support, almost absolutely perfectly. It also has an overthrow or overshoot for the middle of the third wave, the strongest portion of the impulse. And so that tells us that 1, 2, 3, and 4 are very likely placed in the correct position, and there are a few important implications. That means that 3 is shorter than 1, which means 5 is limited. It may not be longer than equality in length with 3. It also means if 4 ends here and 5 begins here, that the bull market is incomplete, and so I'm expecting it to continue so that 5 can complete as an obvious 5-wave structure. When it's done, it should look like a 5-wave structure at the weekly chart level. Within it, so far, we can see primary 2, intermediate 2, and minor 2, and so for the wave count to have what we call the right look, we should also see minor 4, counterpart to minor 2, intermediate 4, counterpart to intermediate 2, and finally the largest one, primary 4, counterpart to primary 1. And each successive fourth wave must remain above its counterpart first wave price territory. When cycle wave 5 is a complete 5-wave structure, it should look like a 5-wave structure. It should have an impulsive count, and it looks like, which is the most common situation for this particular market, the third wave is going to be extended. When third waves extend, they show their subdivisions at higher time frames. And so within primary 3, we can see intermediate 2, and within intermediate 3, we can see minor 2, whereas within primary 1, which was not extended, we can't see those so clearly at the weekly chart level. That's what I mean by we should see those subdivisions at a higher time frame. For now, within minor wave 3, no second wave correction may move beyond its start. This is the final invalidation point for this wave count at this time. If price gets up there, I will expect good strong resistance at the upper edge of this big channel. And finally, this channel eventually will be quite important and indicating for us when this market may have changed from bull to bear. When we get a break of the lower edge of this channel by downward movement, then that would be using the channel to give us channel confirmation of a big trend change. We're not there yet. I still expect that cycle wave 5 may take another 1 to possibly even 2 years to complete. I know it's quite squished up on this chart here, but because we've got 1, 2, 3 big fourth wave corrections coming up, which should show up at the weekly chart level, and we've also got 3 fifth waves to end the structure, it could all be quite time consuming. And it has to end at or before this price limit. Let's take a look at the middle of this fifth wave. We're looking at the extended third wave from this low here. At the daily chart level, here's the end of intermediate 2, and here's the beginning of this extended third wave with minor 1, 2, I expect minor 3 is incomplete, and then minor 4 should arrive fairly soon, sooner rather than later. When it does arrive, it may not move into minor wave 1 price territory, the invalidation point remains the same, and it may end within the fourth wave of 1 lesser degrees price territory, that's minute 4, so minor 4 may end somewhere within this price range below this high and above this low. When minor 4 is expected to last maybe about 2 weeks, minor wave 2 lasted 10 sessions, and so to give the wave count the right look, we should see good proportion between fourth and second waves. But minor 2 is a zigzag, and so minor 4 may be longer lasting, because if it exhibits alternation in structure as a combination, triangle or flat, then it may be longer lasting, as those structures do tend to be longer lasting than zigzags, so possibly even 3 or 4 weeks when it arrives. I will expect it also to be shallow, to exhibit alternation in depth, because minor wave 2 was quite deep in relation to minor wave 1, so let us expect minor 4 to be a shallow, sideways, time-consuming, sideways chop lasting maybe 2 to 4 weeks. And when it's done, more upward movement will be expected for minor 5 to complete the impulse of intermediate 3 at about this target. When minor wave 4 may be complete, then I can add to this target calculation at a second degree. At that stage, it might widen to a small zone, or the target may change. When intermediate 3 is complete, we'll then expect another multi-week pullback or consolidation for intermediate 4, and then another fifth wave up to end primary 3, somewhere about this target, and then a multi-week to possibly even multi-month correction for primary 4, and then when I know where primary 4 has ended and primary 5 has begun, I can calculate a final target for the final upwards wave for you. We're not there yet, we won't be there for many months. And so I expect this bull market will continue. There will be pullbacks and consolidations along the way, and I'm expecting there will be 3 big ones up along toward the end. At the hourly chart level, this is the end of minor wave 3. There is too much strength in this upward movement. The upward breakout above the previous all-time high came with good strong support from volume. This does not look like a B wave. It looks like minute 3 and 4 were over there, and now minute wave 5 is continuing on upward. Minor 3 has passed 1.618, the length of minor wave 1, and minute wave 5 has passed equality in length with minute wave 1. Within minor wave 3, minute 3 exhibits a reasonable Fibonacci ratio to minute 1, which means that minute wave 5 may not exhibit a Fibonacci ratio to either 1 or 3, because for this particular market, the S&P, it's quite common within its impulses to see 2 of the 3 actionary waves exhibit a Fibonacci ratio to each other, and not as common to see all 3. And so with 3 and 1 already exhibiting a ratio, we may not see a ratio for 5. And so that does make target calculation quite difficult, almost impossible. Well, not impossible. When we get to minuet degree, then I can use this wave degree to calculate the final target for you. For now, I can only reasonably do it at minute degree, and so the next ratio for minute 5 to reach 1.618, the length of minute wave 1, is used to calculate a target. If this target is wrong, I expect at this stage it may be too high. When minor wave 3 is complete, I will expect minor wave 4 to begin a choppy, time-consuming consolidation, and the first part of it could exhibit some reasonable strength and create some reasonable fear with some strong downward movement at its beginning. At the weekly chart level, this is a different way of labelling this bull market. I have moved the degree of labelling within the entire bull market all down 1 degree. Instead of a grand super cycle wave coming to an end, we may only see a cycle degree wave come to an end in another 1 or 2 years, to be followed by a relatively brief and shallow bear market interruption before the big secular bull market continues. To see the difference in this, you really need to look at the monthly charts. I link back to those at the beginning of each text article and the beginning of each Lara's weekly publication each week. And you'll see on the monthly charts there the big difference between them. At the end of the week, there's nothing new to say for the month of November because I did that in last week's analysis, so let's just jump straight into the weekly chart level. At the weekly chart level this week, upwards movement with a higher high and a higher low coming after this bullish long lower wick of the previous downward week. This week we see a little increase in volume, and on balance volume confirms new all-time highs this week. RSI is still just in neutral territory. There's a little bit of room before it will reach overbought. It will still probably exhibit longer term bearish divergence with price. That's okay, that can continue for months and possibly even years. ADX is too low to indicate a trend at this stage, and MACD is bullish. So overall this chart supports the Elliott Wave count. There is no, apart from divergence with RSI, which has been persisting for many months now, and so not particularly useful as a timing tool for smaller pullbacks. Apart from this, everything else in this chart is bullish. This is a full bore bullish chart. At the daily chart level, the moving averages have a full bore bullish look. The short-term Fibonacci 13-day moving average has a positive slope and is above the mid-term Fibonacci 55-day moving average, which also has a positive slope. Now both above the 200-day moving average, and prices above all three. This is a full bore bullish look. There is some good support for Thursday's upward day, which broke to a new all-time high with support from volume. We can have confidence that this is an upward breakout from this little consolidation. The upward trend is resuming. There will be pullbacks and consolidations along the way, but at this stage there is absolutely zero evidence of an end to the bull market. We should expect pullbacks and consolidations along the way, and in a bull market they should be used as opportunities. Let us now expect good support about the previous all-time high, about 3150 to 3155. ADX tells us there is an upward trend in a relatively early stage. On balance volume at daily and weekly chart levels is confirming all-time highs in price. ATR has been declining and is overall flat for some time now. That's absolutely normal for this particular market when it's in a bull run. RSI is exhibiting single bearish divergence. This can develop further before we see a pullback or consolidation, but I will be keeping an eye on this. There is a little bit of weakness evident here, but it's very short term in nature. MACD exhibits a bullish crossover, and stochastics is reached overbought. When this market has a bull run, stochastics can remain overbought for a long period of time. On its own, this is hopeless as a timing tool in a trending market. It's best used in a consolidating market. The AD line at the weekly chart level also confirms new all-time highs from price, and at the daily chart level there is a little touch of weakness here. Price moved higher for Friday, but the AD line is flat to ever so slightly declining. This divergence is bearish, but I think it's too weak to give it much weight, and it's not confirmed by any bearishness between price and inverted VIX. At the weekly chart level there is this ongoing longer term bearish divergence between price and inverted VIX, and now there's shorter term bearish divergence. At the daily chart level, inverted VIX has made a new price had made new all-time highs, and it's made a new swing high above this prior point back here, but inverted VIX hasn't, and so there's some short-term divergence. But for Friday, prices moved higher and inverted VIX has moved quite strongly higher, so it's not confirming that slight divergence between price and the AD line. So I'm not going to give the AD line, in this instance, too much weight. That's all for me at the end of this week with your S&P analysis. I hope that all our members are having a fabulous weekend.